Now guys, let's discuss the agenda of this S&P 500 technical analysis. And the agenda, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Remember, this is the weekly technical analysis for the entire week. That is the week of February 27th. Okay, so first we are going to analyze the S&P 500 on the weekly chart. Last week I told you that there was just this $1 difference, and that because of that $1 difference, we have seen a very heavy fall in the entire stock market, right? So similarly, we will analyze the weekly chart of the S&P 500, and we will see weekly chart means the Hawkeye view, the big picture. Okay, and we will see like what has changed and what has not changed. And yes, there is one more thing. This time there is a very, very important update from the Dow Jones on the weekly chart. Okay, so I will discuss this, the important thing from the Dow Jones on the weekly chart. So this has happened after 4 or 5 months. Okay, then comes the second point of the agenda, that is the S&P 500 support and resistance levels. So I will give you the support and resistance levels. For example, yesterday I mentioned this thing that whenever the SP500 comes down, it will find good support in the zone of 3937. Okay, in the zone of 3937. If there comes very heavy selling, then only the S&P 500 will be able to breach and will be able to hit 3900. Okay, otherwise 3937 is good. That's it. And then some reversal in the S&P 500. Okay, so these kind of resistance and support levels, etc. I will discuss in the support and resistance levels. Then comes the third point of the agenda, which is the S&P 500 technical analysis on the daily chart. So we will see that what is happening on each and every day. We will analyze that thing, okay, technically from like Monday, Tuesday, Wednesday, Thursday, Friday, each and every day, right? So this the daily chart means a very, very short term picture for a week, for 2 weeks, that's it. Weekly chart means like for a month or so, okay, for 2 months, for a quarter, you can see that what is expected to happen. Guys, then comes the fourth point of the agenda, and the fourth point of the agenda is the probable movement of the S&P 500 from February 27th, that is Monday, to March 3rd, which is Friday. So I will tell you that how exactly we are anticipating the further movement in the S&P 500 in the coming week. What is expected to happen on Monday, what will happen on Tuesday, etc. Just like this one. Okay, just like this one. So that is the part of this, the fourth point of this, the agenda of this S&P 500 weekly technical analysis for the week of February 27th. So guys, before I proceed further, let me tell you this one more thing also, that this S&P 500 weekly technical analysis is expected to be a bit lengthy, which is why I have made these the sections in the video, so that whichever section you want to watch, you can watch that particular section, and whichever section you want to skip, you can skip, or whichever section you want to rewatch, you can rewatch. Okay, so it's just for your convenience. Okay, I have created these the sections in the YouTube video. And guys, just one last thing, a disclaimer to this S&P 500 technical analysis, that this S&P 500 weekly technical analysis is not a financial advice in any form or in any manner. Secondly, this S&P 500 weekly technical analysis is not an advice on the trade setups in any form or in any manner. So guys, once again, if you have not subscribed to this channel, then please subscribe to this channel and click on the bell notification icon. And if you want these the daily updates, the daily analysis of the S&P 500, as well as the opportunities in the US stock market, then you can join my YouTube community. For that, you just need to press the join button that is there just below the title of this video. So guys, now I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So let's see what is happening on the weekly chart of the S&P 500 as well as on the Dow Jones, because something critical has happened in case of this the Dow Jones. Guys, now we are here, and this is the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. Let me write it down, weekly. Okay, W as in weekly. Weekly means that one candle represents 1 week, not 1 hour or 1 minute. One candle means 1 week. Yes, 1 week. So on this, the weekly chart, let's do this, the technical analysis, and then we will see what is happening in case of the Dow Jones and why the Dow Jones is now very important for the S&P 500. Okay, as well as for the Nasdaq, right? And then the ETFs like QQQ and SPY and DIA. So the technical analysis, first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Bands. because the S&P 500 is trading in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that through the Bollinger Bands, S&P 500 is still bullish, right? Then comes the moving averages. So if you notice that the S&P 500 has closed on the weekly chart, it has closed below all of the moving averages. However, the fan out in the moving averages is supporting the bullish trend. This means that through the moving averages, through the EMA, the S&P 500 is clearly neutral on the weekly chart. Okay, whenever I say neutral means that neutral will support the trend of the particular stock or the particular index. In this case, this is the S&P 500 index. Then comes the Ichimoku cloud. Now, if you look into this, the Ichimoku cloud, because the S&P 500 has closed below the Ichimoku cloud, and it was supposed to. This was 100% confirmed last week. Okay, so because the S&P 500 is trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud, and this was no surprise at all. We knew that the open and the close of the S&P 500 on the weekly chart will be below the Ichimoku cloud. This was 100% confirmed in the previous week. Okay, so this was nothing new, no surprise. Then comes other technical indicators. First comes the MACD. If you notice, the MACD is positive and the signal is negative, and the MACD is more than the signal. Okay, this means that directionally MACD is bullish. Yes, directionally MACD is bullish, but because the signal is still negative, this means that the MACD is not still in the long-term bullish trend. MACD is still trading at neutral. But as of now, it is still in the long-term bearish, right? So, but because the MACD is more than the signal, this means that directionally MACD is bullish. This bullishness in the S&P 500 through the MACD is a very, very short term. Short term means like for 1 day, for 4 hours, for 2 hours, for 2 days. That's it. Okay, means whatever reversal you are seeing, intraday reversals you are seeing, bullish reversal, that is because of this, the MACD that is supporting, right? That's it. And when you look into the stochastic RSI, now the stochastic RSI is very, very clear. It is bearish, clearly bearish. This means that the S&P 500 is clearly bearish through the stochastic RSI. No question. Okay. Divergence is normal, not a problem. Saturation is okay, not a problem. Volatility is fine. And momentum is neutral. Okay. And so now what we have seen is that on the weekly chart of the S&P 500, that the S&P 500 is clearly bullish through the Bollinger Bands. Okay, S&P 500 is neutral through the EMA or the moving averages. S&P 500 is bearish. It is clearly bearish through the Ichimoku cloud. S&P 500 is directionally bullish through the MACD. S&P 500 is clearly bearish through the stochastic RSI. 2 bearish, 2 bullish, 1 neutral. And secondly, S&P 500 is still trading below the Ichimoku cloud. This means that the long-term trend is clearly bearish. No question. Okay, no confusion, nothing. Okay, no rocket science. It is in the long-term bear trend, and as of now, technicals are saying that it is neutral. Whenever it is neutral, neutral means bearish because the long-term trend is bearish. Simple. Okay, no rocket science. So now this is what we have seen on the S&P 500 weekly chart, right? Now let me tell you the important thing that has happened in the Dow Jones, and that kind of important thing is something, okay, that can give us like 500 or 600 or 1,000, 2,000% profits through the options. So guys, here we go, and this is the chart of the Dow Jones. Okay, Dow Jones. Remember that we are not discussing the technical analysis, or we are not doing any kind of technical analysis of the Dow Jones. Okay, we are simply looking into this one important thing that can impact the entire US stock market and the global stock markets. Okay, because see, Dow Jones is the face of the economy. So Dow, most of the times, you will notice that Dow is on the driving seat. The Dow Jones is on the driving seat. Dow Jones is the primary index that actually drives the entire stock market, and then the other indices like the S&P 500, Nasdaq, and their ETFs like QQQ, okay, SPY, and DIA, etc. So what has happened on this, the weekly chart of this, the Dow Jones? Okay, so one thing that you are going to notice is that after many months, finally the Dow Jones has closed below. Okay, these are moving averages. Okay, fine, but this is not the thing that I want to talk about. I want to talk about, okay, this the MACD. If you notice that finally there is a crossover, okay, here in the MACD and the signal. And this has happened after mid of October 2020. It means after 5 months approximately. This has happened after 5 months. Okay, where we are seeing a crossover in the MACD. So MACD is now less than the signal. Okay, so this crossover is seen on the weekly chart. And if you know the technicals, or if you have even a little knowledge about the technicals, okay, then you know that you are not going to see very frequent changes or very frequent crossover in the MACD, particularly on the weekly chart. This means that if we have seen, okay, a bearish candle here, okay, one bearish candle, now it opens the further possibilities for 2, 3, 4, 5 or so. These more like, okay, the bearish candles. So that will be because the MACD, because there is a crossover in the MACD in the signal, and MACD is not permitted and has never been seen, okay, that giving like these the frequent changes, the frequent crossovers like up, down, no. Particularly on the weekly chart, it will take its time, at least a month, 2 months before it can give you the next reversal. For example, if you notice, and if you can see that we have seen a crossover here, that was on September 12th, and then the next crossover, it came after around 24th of October, on October 24th. So that was a more than 1 month, right? So that is why I'm saying that you will never see these frequent crossovers in the MACD. Now, this is one thing that the MACD has crossed over, okay, and now the MACD is clearly bearish. MACD is the moving average convergence divergence, okay, so it has converged. Now it is going to diverge, right? Now, that was not the only thing. Now the second thing that comes into the picture is the stochastic RSI. Stochastic RSI is already bearish. Now MACD is bearish and the stochastic RSI is bearish, and that is the reason. So if you have subscribed to my channel for last many months or more than a year or two, then I have mentioned this many times, that whenever the MACD and the stochastic RSI both are aligned in a particular direction, then that becomes the direction of that particular stock or the index or the crypto or the commodity. In this case, we are talking about the Dow Jones Index. Okay, and the Dow Jones Index is going to impact the SP500 index, and in turn the entire US stock market and the global stock market, right? So because now the Dow Jones is aligned bearish, okay, and the S&P 500, it was already bearish. This means that now the bearishness is all around. Now I hope that you are clear on this part, that why we are bearish, and why I am saying that even though it is neutral but it is bearish, and that there is a resumption of the long-term bearish trend in the S&P 500. So some of my YouTube community members have asked me that the resumption of the bearish trend to what level. So I have answered that again to 3,500. Okay, this is what we are now expecting in the coming weeks, okay, or in next 1 or 2 months. Because if you notice that now the 200 week moving average is around 3,700. So definitely the 200 week moving average, it is there in the picture, and below that again it has to respect the 3,500. So it is there in the picture. However, this is conditional, okay, because and this condition is, I'm going to talk about the daily chart, because on the daily chart it has to struggle around 3,900 before it can hit the 3,500. Okay, so that I'm going to discuss in the daily chart, technical analysis on the daily chart, as well as in the last point of the agenda, that is the probable movement. Okay, as of now this is clear. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then please feel free to join my YouTube community. Now guys, let's talk about the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the support and resistance levels for the S&P 500 for the coming week. Now guys, we are here, and this is the second point of the agenda of this S&P 500 weekly technical analysis for the week of February 27th, 2023. So this is the second point of the agenda, is the support and resistance levels for the S&P 500. Now guys, as you know that my support and resistance levels are very, very sensitive and very, very critical. Okay, so these are not the standard pivot levels or any standard support and resistance levels that you find through any these are technicals. Okay, so this is what I have calculated myself. and that is why these are very, very sensitive. Not just the S&P 500, but the Dow Jones also respects the support and resistance levels very well. So before I give you these the numbers, okay, so let me clear a few things. So this was in my final update to my YouTube community members yesterday, okay, before the closing of the entire stock market. Anyways, the first thing is that there is no significant event planned for the next week. Okay, no means that this is the economic data. Okay, no press conference of the Federal Reserve Chairman. Okay, nothing like that. So there is no significant event planned for the next week. And what? Okay, and what that means? This means that the bearish sentiments will continue, or these the bearish sentiments will prevail and will be carried forward to the next week. And any bullish reversal will be seen as a bearish opportunity. So feel free to go bearish, okay, on any bullish reversal. Means a bullish reversal that hits our resistance levels. Okay. So and the second point is the zone of 4035 and beyond that is now almost out of the picture. So what it means that anything beyond 4035 is not possible, okay, as of now, and it is not in the picture. Okay, it is gone. Secondly, even 4035 is for now, okay, it is out of the picture, because before it can hit the 4035, it has to struggle here. Okay, what is that? That is the 3991. Okay, a very heavy resistance. Just above the 3991 resistance, we have the 200-day EMA, 200-day exponential moving average. Okay, and it is very, very significant. Okay, so this itself means that as of now, reaching a reversal to 4035 and beyond 4035, that is out of the picture. Okay, so in some cases, in some circumstances, a reversal to 3991 may be possible, is possible. Okay, but again, from this the 3991, it is expected to fall. Again, it is expected to fall. Okay. Then comes the third point. This was the yesterday's blessing from the market manipulators have opened door to further fall without saturating the technicals. Okay, yes, this was the very, very critical thing that I forgot to mention here, and that particular thing has helped us to gain, okay, this is a 600% profit and the 500% profit on different days. Okay, and what was that thing? This was actually the saturation of the stochastic RSI. On Tuesday itself, okay, when we have seen this a very heavy fall, what has happened is that on this particular day, the stochastic RSI, okay, it got saturated. Then the next day, again, the second day of saturation. So the third day, there was a probability of an intraday reversal. And I have shared this with my YouTube community members, that now we have some good probability of a reversal, but not heavy. The heavy probability of reversal will be on Friday, if only and only if on Thursday, if there comes another red candle. Okay, but what has happened is that on Thursday itself, the market manipulators, they came into the picture. They gave this the up, down, and up. Okay, and then finally on Thursday, they compelled the stochastic RSI to come out from the saturation. What that means? Come out of the saturation means that now the market manipulators have opened a good room for the S&P 500 to come down further. Okay, so this was all because of this. So this was a blessing in disguise from the market manipulators that my YouTube community members have captured, and they have made a lot of profit on this particular day on Thursday. Okay, anyways, so see, this was the critical thing, that now the stochastic RSI, it came out of the saturation, and again, as of now, it is still not saturated, right? So this was the thing, that now the market manipulators have opened doors to further fall without saturating the technicals. Then the next point was now the zone of 3937 and the zone of 3840 are back into the picture. Okay, and a near-term possibility of seeing S&P 500 moving towards 3500, and even beyond that towards 3000. Okay, means in next few weeks or in next few months. Okay. Then another point that we have already discussed, that on the weekly chart, the MACD of the Dow Jones has gone bearish after 5 months, 4 or 5 months. Okay, and is now aligned with already bearish stochastic RSI, indicating the continuation of the bearish trend in the overall stock market. Okay, so now I hope these things are very, very clear. First of all, anything to the zone of 4035 or beyond 4035, as of now, it is out of the picture. Okay. Secondly, anything up to 4008 or 4009 A very few chances, very few chances, because for that to happen, S&P 500 has to breach the 3991. Okay, so even there's a 3991. Okay, S&P 500 is going to, it has to put some, some efforts, and the market manipulators have to again come into the picture in order to give a bullish reversal, in order to form a new trap, a bullish trap. Okay, and then a further fall. Okay, so yes, 3991, it is in the picture. Some chances, some good chances. Okay, and little chances for the 4008, 4009, and that is the 200 day EMA, exponential moving average. Okay, now the immediate support comes at 3960, and this is what we knew, that 3960 is there. Okay, so 3960 means if there comes any open, okay, see, open and the initial movement, this is what we are going to talk about in the last point of the agenda of this S&P 500 weekly technical analysis. Okay, in the probable movement. Okay, but as of now, if there comes any open above 3960, then 3960 is going to act as a good support. Okay, then the next support itself, so next support, okay, it is a good support, and it is the zone of 3937 itself. And this now the zone of 3937 itself, okay, it is at the boundary of the Ichimoku. So this means that this is going to act as a very strong support for the S&P 500, because these are two factors. Okay, number one is the calculated support zone of 3937. Number two is the boundary of the Ichimoku, or the Ichimoku cloud itself. Okay, so these two are going to give a good support to the S&P 500. Okay. But still S&P 500 is under obligation to hit the Ichimoku cloud, and it can even enter into the Ichimoku cloud. That is why I'm saying a fall is there. Okay, it will be there, but whether it will be seen on Monday or Tuesday or on Thursday or Friday, this is what we are going to discuss in the last point of the agenda. Okay. So then thereafter, okay, the back-to-back the boundaries of the Ichimoku means Ichimoku cloud itself, okay, it acts as a support and resistance level. Okay, means zone. Okay, actually. So this then comes the 3900 in the picture. It is there in the picture, 3900. Then we have 3884, 3884. Okay, this is again going to act as a very good support. Now comes a very good support, okay, or a very heavy support zone, and this very heavy support zone, okay. So it is actually this the 3840, the zone of 3840 itself is a very strong support, very heavy support. Okay, then if we extend it to 3790, okay, then further, okay, it is good, because historically we have seen that there was a consolidation from 3790 to the zone of 3840. Okay, this means that any fall, any kind of fall, light fall, heavy fall, okay, heavy fall, okay, doesn't matter, it is going to find some good support, very heavy support here. And even if the S&P 500 is able to breach this, the zone of 3840, then also the next day it will give a bullish reversal. Okay, it has to respect the 3840, the zone of 3840, at least for 1, 2, or 3 days. It has to be there around or in the zone of 3840 or here. Okay, for 1, 2, or 3 days before it can, resume its journey towards 3500 or 3000. Okay, so as of now, beyond 3790, okay, in the coming week, okay, I'm not expecting, okay. But yes, there are chances if there comes a very heavy fall, okay, and that can come. Why there's the heavy fall? Because back to back we have seen this is the critical data. Secondly, now the MACD has crossed over, okay, in the case of the Dow Jones. So yes, there are fair chances that seeing a movement beyond this 3790. Okay, but whenever that happens, okay, and if you are my YouTube community member, then I will tell you, okay, that what we are expecting and how we are expecting, not what, but exactly how. Okay, how we are expecting, okay, whether it will come down, or first it will give a reversal and then it will come down. Okay, so that kind of movement. So this is what I give you every day. Okay, so but for now, okay, in general, okay, anything beyond this heavy zone 3840 to 3790, okay, as of now chances are less. Okay, but there are chances. I'm not denying that it cannot happen. It can happen, but chances are less. Okay, so from 3790 to the 4035, okay, not exactly 4035, but to 4009 or 3991. Okay, so guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And whenever you want to join my YouTube community in order to get these important updates the daily updates of S&P 500 from Monday through Friday, then you can click on this, the join button that is there just below the title of this video. Now guys, let's move on to this, the point number 3 of the agenda of this S&P 500 weekly technical analysis. And the point number 3 of the agenda is the S&P 500 technical analysis on the daily chart. So let's see what is happening on the daily chart, okay, and how the technicals, okay, or what the technicals are saying, whether the technicals are neutral, bullish or bearish, okay, whether anything is going to be saturated or not, okay, etc, etc. I have this one more very important thing to share with you, that if you want to join my YouTube community, then let me tell you the process. And guys, it's not just about this, the daily updates and the analysis of the S&P 500, but also I'm giving these opportunities that are present in the entire stock market. So guys, in order to join my YouTube community, either you can use the join button that is there just below the title of the video, or you can simply visit my channel page, my YouTube channel page. And when you visit my YouTube channel page, then you will see that there is this, the join button, JOIN, join button. So when you click on this, the join button, then you will notice that we have these, the 3 options, all midweek updates, daily S&P 500 updates, and updates and opportunities. So this, the all midweek updates, it will be discontinued from March 1st, which is why you are requested to either subscribe to the daily S&P 500 updates or the updates and opportunities. So this, the daily S&P 500 updates means that you will get the daily updates, each and everything, pre-market update, okay, first update, second, third, fourth update, okay, and then the final update of the S&P 500 from Monday through Friday, each and everything. And the updates and opportunities means that you will get the daily S&P 500 updates as usual from Monday through Friday, everything. Plus you will get these, the opportunities that are there in the entire stock market. So every week, okay, I will give you like 5 to 10 opportunities, 5 to 10. And guys, if you notice that many people have joined my YouTube community for last many months, it's going to be like about an year, okay, they have joined my YouTube community and they are getting the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. So guys, whenever you want to join my YouTube community, you are welcome. And guys, there is one more thing, that once you have joined my YouTube community, then you need to visit my YouTube channel page and click on this, the community tab that is there, because you are going to find each and every update in the community tab of my YouTube channel. And if you are using the YouTube app, then you will get the notifications in your YouTube app. Now guys, we are going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. Remember, in the first point we have seen, okay, the action on the weekly chart, the movement of the S&P 500 on the weekly chart. Now we are going to talk about the daily chart, that what is happening on the daily chart technically, right? Technically. So let me write it down, daily chart. D as in daily chart. Daily chart means that one candle represents one day, not 1 week, okay, 1 month or one hour. One candle means one day, okay. So the first thing that we are going to see here, okay, the candle itself, okay, the shape of the candle. So this is the shape of the candle, okay. It is simply a bearish candle, nothing else, okay. So you see, if the candle would have closed, okay, in this cusp pattern, in that case, then definitely, okay, we could say that yes, there will be, you know, some chances or some possibility of seeing, okay, an initial bullish movement on Monday, okay, or in the, okay, or anytime, okay, on Monday. But as of now, we are not seeing any kind of cusp. And also the shape of the candle, okay, it is not defined, and also definitely it is not a hammer. That is why we are going to count it, or we are going to see it as a bearish candle. Simple, okay, a bearish candle and nothing else. Now, when you look into the bearish candle, this bearish candle has formed, okay, after a very strong technical bearish candle, okay, 2, 3, 4, 5, 6, okay, bearish candles. This means that this bearish candle is also signifying the bearishness in the entire stock market. It is not a significator of any reversal. It is not a significator of any gap up open. It is not a significator of any, not also the gap down open, but it is simply saying bearishness. Now, when I say bearishness, okay, it can result in an initial downward movement, initial bearish movement upon open. okay, means whether there comes, okay, the bearish open or the bullish open, and initial bearish, okay, this is the movement. Secondly, if there comes a gap down open, then that is also, so that is also, okay, a significant, so that is also means the bearishness. Okay, if there comes a gap up open, then after the gap up open, you will see that it is coming down. So that is all because of the bearishness. This means the bearishness all around. Now, when we look into these, the technical indicators. So first comes this Bollinger Bands. This is the lower band of the Bollinger Band, and this is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Clear? Then comes the moving averages. Now, moving averages are at a very, very critical junction, okay, on this, the daily chart of the S&P 500. If you see that the moving averages are about to cross over, crossover means the bearish crossover. Okay, last time we have seen this, the bullish crossover, that was in the month of January. Okay, and then it moved up, and now we are going to see a bearish crossover. Okay, so as of now, seeing that the moving averages are already, okay, beyond or above the zone of 4035, and the closing of the S&P 500, it was at 3970. Okay, so there are not much chances, okay, like just less than 1% chances, if some miracle happens, or if the market manipulators, they come in the open and then they, you know, push the S&P 500 heavily, or the entire stock market heavily up without any reason, then only we can expect a slip. Okay, if you are subscribed to my channel for last many months, then you know, okay, there's a slip. Okay, slip means that the means one thing, okay, it was supposed to happen, but that has not happened. Rather, the stock market or that particular index, in this case S&P 500, has regained the bullish trend. Okay, so the chances of seeing a slip, okay, are less than 1%. Okay, so 99.5%, 99.9% bearish crossover will be seen on Monday. Okay, so once the bearish crossover is seen on Monday, then the bearishness, it will be all around, and that bearishness will help the entire stock market to come down heavily. So for now, the S&P 500 has closed below all of the moving averages, but still the S&P but still these the moving averages, EMA, exponential moving averages, okay, and some other moving averages, they are in the bullish pattern. This means that the moving averages are clearly saying a neutral. Okay, moving averages are making the S&P 500 neutral. Okay, then comes the Ichimoku cloud. Now, because the S&P 500 is still trading above the Ichimoku cloud, this means that the S&P 500 is clearly bullish through the Ichimoku cloud. Okay, now comes some other technical indicators. Now, these are technical indicators. First, if you notice the MACD. MACD is clearly less than the signal. However, both MACD and signal both are positive. But on Monday, particularly MACD is expected to go negative. Okay, so as of now, we will say that clearly, okay, S&P 500 is bearish through the MACD. Okay, on Monday MACD will be negative, then it will then pull the signal, okay, into the negative, and then further more bearishness. Okay, then comes the stochastic RSI. Now, as I mentioned earlier, that this on Thursday, it was a blessing in disguise from the market manipulators. Blessing in disguise from the market manipulators, right? So what actually they did is that they stopped S&P 500 to hit the absolute critical saturated technicals. Okay, and now because of this this candle that you are seeing, okay, this is the green candle on Thursday. Okay, because of that, now the stochastic RSI is not saturated and is not expected to be saturated, at least on Monday and Tuesday. Okay, Tuesday it can, okay, if there comes a heavy red candle on Monday, then Tuesday it can, okay, else it will not. Okay, this means that now even if there comes a 5% fall, 10% fall, 20% fall, okay, within a day, then also the technicals will not saturate. This is particularly, okay, to my YouTube community members who have asked me this question. Okay, and I've also replied, okay, this in my final update also, okay, and in the second update also, that even if there comes 5, 10 or 20% fall in the S&P 500 within a day, like on Monday, then also the technicals will not saturate. So this was a blessing in disguise from the market manipulators. Okay, so now, yes, Stochastic RSI K channel is around 4 or the D channel is around 3. Both are less than 10. So clearly stochastic RSI is not saying bullish, but it is saying bearish. Okay, that the S&P 500 is clearly bearish through the stochastic RSI. Then comes the divergence. Divergence is normal, not a problem. Saturation is normal. Volatility is normal. Momentum is neutral. Okay. So now guys, what we have seen is that the S&P 500 is clearly bearish through the Bollinger Bands. S&P 500 is clearly neutral through the moving averages. S&P 500 is bullish only through the Ichimoku cloud. S&P 500 is bearish through the MACD. S&P 500 is bearish through the stochastic RSI. So now guys, we can clearly see that the S&P 500 is again 80% to 90% bearish on the daily chart. Simple. Okay. So now on the weekly chart, it has resumed its long-term bearish trend, and also on the daily chart, it has resumed its short-term bearish trend. Okay. This means that bearishness, bearishness, and bearishness. Okay. Secondly, okay, another favorable thing that has happened to the bears is the crossover in the MACD and the signal, or in case of the Dow Jones. Okay, that is further going to bring more bearishness in the entire stock market. On the daily chart of the S&P 500, MACD and the stochastic RSI both are aligned bearish. This means that bearishness or the bearish is the direction of the S&P 500. But this does not mean, and guys, do not get confused, okay, that because see, bearishness is all around, bearishness is there, fine, but this does not mean that there will not be any green candle or any intraday reversal. It will be, because that is the natural flow of the stock market. That is the natural flow of any stock or any index, just like S&P 500. Intraday, you can expect reversal, okay, or next week, like 1 or 2 days, okay, you can expect, okay, this bullish, this is the bullish reversal. Okay, that will be normal. But what does that mean? This means that if there comes any bullish reversal, then that bullish reversal is going to act as an opportunity to go bearish. Okay, this is what it means, bearishness. This means the bearishness. Okay, so just like when there is like when there is there's the bull market, bullish stock market, or the bullish or the bullishness, okay, everywhere, then what we do? We buy on dips. Okay, similarly, now we are seeing the bearishness. So what we do in the case of bearishness? We short sell. Okay, we buy put options. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community, then I provided the link in the description of the video and also in the comment section. You can use that link, or you can simply click the join button that is there just below the title of this YouTube video. Now guys, let's move on to the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And this last point of the agenda is the probable movement of the S&P 500 for the week of February 27th. That is from February 27th, Monday, to 3rd of March, Friday. Let's see how the S&P 500 is expected to react, behave, and what we can expect on Monday, what we can expect on Tuesday, Wednesday, Thursday, etc. Where it is going to find the support, where to the, okay, this is the reversal, then this is the fall, etc., etc. Okay, this is the entire picture. So guys, this is the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And here I am going to discuss the probable movement of the S&P 500 from February 27th, that is Monday, to March 3rd, that is Friday. So guys, again, I need you to remember, okay, these things. Okay, that there is no significant event planned for the next week, means bearish sentiments. The zone of 4035 and beyond that is now almost out of the picture. And then the blessing from the market manipulators means they have stopped, okay, going the S&P 500 to hit the absolute critical, okay, the technicals. In that case, okay, we would have seen a huge reversal, a bullish reversal, but that is not the, okay, in that the picture. Then now the zone of 3937 and the zone of 3840 are back into the picture, and also near term possibility of 3500 and to 3000. And the crossover in the MACD of the Dow Jones, okay, after 4 or 5 months. So, okay, so these things, just remember these things, okay. So now guys, along with these things, okay, now the first point, we have recently seen three times, okay, 3x non-farm payroll data. Okay, non-farm payroll data. This was something that no one has ever expected, that the labor market will be so strong, so much strong. Okay, and this 3 times NFP data has compelled the Federal Reserve Chairman to change his tone from positive to negative within 5 days, only within 5 days. Okay, first, okay, that was the thing. Then came, okay, this the PPI data. Now the PPI data has indicated that the third parties who are paying, okay, on your behalf, they are going to charge you more because people, okay, they have the money to pay. Okay, so they are going to charge you more, means the inflation will further move up. Okay, then next, okay, back to back, then came the CPI data. Then the CPI data indicated that the inflation is holding, and now the inflation is going to give, okay, this bullish reversal, means the inflation will move up, okay, in the next month. Okay, then that was not, okay, sufficient. Then back to back, then came the PCE data and the core PCE data. So now this is the PC data or the core PC data. Okay, so the Wall Street has expected 1.2%, but it was in actual it was 1.8%. Okay, 50% more than what the Wall Street has expected. Okay, PC and the core PC means how much you are spending, and on your behalf, okay, these the like your employees, etc. Okay, they are spending, means collectively you and your employer, okay, how much you are spending. So this clearly indicates that now people have the money, they are spending, and this is spending, okay, this is going to help the inflation to move up. This is not going to help the inflation to come down, but to move up. All of these factors have contributed to a fact. What fact? To the fact that now the inflation is going to move up. It is going to go bullish. So now the Feds, okay, they are expected to go aggressive back to like 50 BPS, okay, or more, because clearly whatever they did, okay, in this is the 1 year. Last March 2022, they started to raise the interest rates, and now this is March 2023. Okay, so in 1 year they have not. So this clearly indicates that they have not gained anything at all. Okay, so inflation, it has moved up. They were just able to confine the inflation to the high levels. Okay, they stopped the inflation to move, okay, beyond like 10%. It hit 9.2% at max. Okay, they were able to confine the inflation to that. Okay, but that is not actually they are looking for. They are looking for 2%, and so far the inflation is 3.5 times, okay, of their expected is the level. This means that almost, okay, they have gained nothing, okay, in 1 year. This means that now they are expected to go more aggressive. Now, what this aggression means in terms of the numbers, okay, when we talk about this, the movement of the S&P 500, Dow Jones, and so in terms of the S&P 500, this clearly means, okay, that we are heading towards 3,500, not just 3,500, but now also 3,000 is in the picture. Okay, this is clear. So this is in terms of the number, means the big picture. This is the big picture. Okay, so now Feds are going to be, okay, so they will go more aggressive again. Okay, if or most likely, not if, but most likely in the next month, we can expect a 50 basis point rate hike, okay, from the Feds, and that will act as like this the catalyst in this bearish run. Okay, that will clearly indicate that earlier Federal Reserve that earlier Feds have given, a little room, okay, by thinking that 25 basis point, okay, this will be okay because now the inflation is coming down. But now the inflation is super bullish. Okay, all of the factors are saying inflation is moving up. This means that we can expect a 50 basis point rate hike from them. Okay, so 50 basis point to 25 and then back to 50. This clearly indicates that stock market, okay, it is not expected to go bullish anymore. Bullishness is done. And now we are going into or moving into the recession. Okay, that was there in the picture. Recession, it was always in the picture. Okay, some these are market manipulators. Okay, through these news channels and through these news websites and everywhere. Okay, so they mentioned that now the recession is not in the picture and feel free to go bullish. And some are even saying that they will be the center rally and everything will be bullish. Okay. So let them say whatever they want to say, okay, but we will stick to the technicals. Whatever our technicals will say, we will accept that part. That's it, nothing else. Okay, we will analyze. So whatever the technical analysis, okay, and the data analysis say, we will stick to that. That's it. So now, guys, this thing is clear that on Monday, okay, there will be a confirmed crossover in these the moving averages. Okay. Because as of now, okay, there is no reason that there should come, okay, this is the 2% bullish reversal, okay, on Monday. Technicals are definitely not supporting this the bullish reversal, and other than the technical, there is no news, no data. Okay, there is nothing, not even 1% that can give even 1% reversal. Then forget about the 2%. Okay, bullish reversal. This means that now 99.99% it is certain that there will be a confirmed crossover in the moving averages on Monday. Done. That crossover in the moving averages will confirm that now we are going bearish. Okay, now see how the stock market works. Okay, see the beauty of the stock market or an index. Okay, that once there comes this the crossover in the moving average, okay, then you will see that, see, it doesn't matter that what kind of candle is there, but on Monday S&P 500 is expected to hit 3937. That's it, means the Ichimoku cloud. That's it. Okay, and if it fails on Monday, then in that case on Tuesday it will not only hit the 3937, but it will also hit almost this the 3923 and 3900. Okay, so most likely it is expected to hit, okay, this the 3937 on Monday itself. Okay, intraday a little bit reversal. Okay, that is fine, that's not a problem. Okay, so now this the moving average will cross over by Wednesday, I guess Tuesday or Wednesday. Okay, these the moving averages will be around this the 200 day EMA. On I think Thursday, okay, it will hit, okay, around 3991 approx. Okay, Wednesday or Thursday. And at the same time, what will happen, because it's been after 3 months, it was January, February, yes, after 2 months. Okay, this will be the March 2023. Okay, so S&P 500, okay, it will find some good support here. Okay, here, okay, around or at the Ichimoku cloud. Then we can expect a short bullish reversal. Okay, technically this will come. Now technically what can happen is that on Monday, okay, if there comes a red candle, a bearish candle, then on Tuesday, okay, there are chances that we can see a stochastic RSI hitting 0.00. Okay, so that will be the first indication, that will be the first indication that now on Tuesday, because it has hit, then on Wednesday, okay, it has hit this the absolute zero. So that will again support a bullish reversal. Ichimoku cloud plus stochastic RSI. So technicals will support a bullish reversal either on Wednesday or on Thursday. Okay, exactly when. So that if you are my YouTube community member, then I will tell you, okay, when we are expecting that the reversal, so that, okay, you can book your profits, okay, one day before that, and then wait for the reversal, then go, then short on the reversal, and then again. Okay, this is the same. Okay, this is a cycle. So whenever there comes a reversal, so what will happen in that case, the S&P 500 will try to retest the moving averages. Now this retest of the moving averages, it can come around 3991. In that case only the 3991, okay, it will be possible. Okay, I'm not saying that 100% reset, okay, retest will be there. Okay, generally this is the natural flow of the stock market, but if the S&P 500 comes down and if it closes below the Ichimoku cloud, two consecutive closings because below the Ichimoku cloud, then the retest will not happen here. Then the retest will happen somewhere, okay, below this the Ichimoku cloud, maybe next week. Okay, so that is the second scenario. So first scenario is there, okay, retest, it will retest the moving averages, that will give you an opportunity to go bearish. Okay, means short sell, feel free to short sell 3991. Okay, nothing beyond 3991. Okay, or if it further comes and if the S&P 500 fails, then on Friday, I guess, okay, Thursday, Friday, okay, moving averages will be around here 3960 or 3975, and then, okay, the S&P 500 will be able to retest. Okay, that is the first part. Second part is that if the S&P 500 fails, okay, Monday and Tuesday or Tuesday on Wednesday, it means two consecutive closings. If there comes two consecutive closings below the Ichimoku cloud, below the Ichimoku cloud means it will be how much? It will be, yep, it will be below 3923. Okay, 3923 is the number. So two consecutive closings below 3923. Two consecutive closings below 3923 means now S&P 500 has given up clearly S&P 500, okay, it has given up and now it want to go bearish. This means that there will be, further bearishness to what? To 3884. Okay, it will be the 3884, it will hit the 3884 and then we can expect a reversal. But this reversal, this time it will retest the Ichimoku cloud, not the moving averages, not the EMS, but the Ichimoku cloud. A retest to the Ichimoku cloud, and that time the Ichimoku cloud, okay, it will be around 3930 or 3937. Okay, again the zone So we can clearly say, like, we can simply say the zone of 3937. Okay, once it comes below the zone of 3937, then it will retest the zone of 3937 down. Okay, so once it comes down, then it will be handled by the 3840, a very strong support as well as a strong resistance. Historically, always proved itself. Okay, so any fall will be handled by the zone of 3840, and not just by the zone of 3840, but a very heavy zone, support zone that we have from the zone of 3840 to 3790. Okay, 1, 2, or 3 days. A stock market, the S&P 500 is obliged. So S&P 500 is under obligation to give respect this particular zone. It has to spend at least 1, 2, or 3 days. Okay, here, even if it breaches, then also it will retest. Okay, again retest, move up, then again. Okay, it has to spend some time, some good time, 1, 2 days. Okay, minimum. Okay, around here. Okay, then only it is permitted, or it is allowed technically to fall further towards 3500. Okay, so all the chances are less, but I'm not denying. Okay, but if that happens, okay, then, and if you are my YouTube community member, then I will tell you, okay, where exactly we are expecting, okay, this particular thing. Okay, but now, okay, this is the picture, scenario number 1, scenario number 2. Now some of you want to ask about this, the bullish movement. Okay, see, as of now, I've cleared this thing that anything to 4035 or beyond 4035, okay, as such is not possible. Okay, technically is not possible, but if the market manipulators want, okay, then definitely everything is possible. Okay, but technically and through data analysis, that is not possible. Clear? Okay. Secondly, any bullish reversal if comes, then first it has to struggle here, okay, around 3991. This is the resistance around 3991. Okay, and once it breaches the 3991, then only it is allowed to move to not 4035 but to the 200-day EMA. This is the 200-day EMA around 4009, 4008. Okay, it is again and again, okay, struggled there. Okay, 4000, then that's it, done, and then a fall. Okay, that is the bullishness. That is the only bullishness. Okay, the other bullishness, or the other this the bullish reverse, it will come if there comes 2 consecutive closings below the Chimoku cloud, below 3923. Then it can retest the Chimoku cloud. Okay, again 3937. Retest means the 3937. Okay, then again it will fall. Okay, any fall will be very well handled by the zone from 3790 to 3840. Okay, because historically this was a consolidation zone and it is a big zone. Okay, 50 points. Okay, very heavy zone. Okay, so just like the S&P 500, okay, it failed here. Okay, because it was a very heavy zone, 50-point zone. Similarly, we have a very heavy zone here. Similarly, okay, it will find very good support, okay, here, and then a bounce. Okay, means a bullish reversal. But any bullish reversal for now will be a limited bullish reversal. Okay, you need to understand this point, that any bullish reversal for now will be a limited bullish reversal, not a heavy bullish reversal. Okay, and the heavy or the good bullish reversal can come only in a particular case when the stochastic RSI, okay, it is saturated, and also S&P 500 is holding around this Chimoku cloud. Then these two technicals has the potential to give a good bullish reversal, like 1%, 1.5%. Okay, that much. Okay, again, but not, okay, not beyond that. Okay, that part. And again, guys, do not forget that now the MACD, there is a crossover in the MACD and the signal on the weekly chart of the Dow Jones. That is confirming that now the Dow Jones is going bearish. Sorry, guys. Oh, okay. Guys, sorry. Okay, guys, I forgot to tell you, one more thing about the Dow Jones. Okay, that it came out of the consolidation. So, guys, if you see, this is the Dow Jones. Okay. So on this the Dow Jones, what has happened is that earlier, okay, it was trading, okay, in this the consolidation. This is the same thing I mentioned, okay, in my previous S&P 500 weekly technical analysis. Okay, so now it has come out of the consolidation because of this the heavy candle. Okay, so now it is out of the consolidation, it is coming down. Yes, okay, a short bullish reversal, okay, or an intraday bullish reversal, okay, to this level, okay, that is possible, fairly possible, okay, not a big deal. But now because it is out of the consolidation in the bear side, where in the bear side, this means that now it is going bearish. Okay, simple. This is the rule of consolidation. No rocket science, right? So guys, this is clear. Okay, this thing is very clear. So guys, once again, if you want the daily analysis, the daily updates of the S&P 500 from Monday through Friday, as well as these opportunities, minimum 5 to 10 opportunities every week. Okay, in that case you can join my YouTube community. So the link is in the description and also in the comment section, or also you can use the join button that is there just below the title of this video. So guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And guys, hit like if you have liked this video, and if you have any questions, okay, anything that you want to ask, then please feel free to comment and I'll be happy to answer your questions. So guys, this was S&P 500 weekly technical analysis for the week of February 27th, 2023. That is from February 27th, Monday, to 3rd of March, Friday.